Howdy, this is Michael Good from reapertrades.com. This is your Saturday morning Q&A. Just one question in this video. It was a fairly involved question. The person asked about stocks like Zane that go up a whole bunch in one day. What do I look for in those? Do I play those? If so, why or why not? And I think that's a pretty good description of what he said. And the thing to look at, Zane here, it ran, what, 600% in one day. From like 40 cents all the way up to 210 it closed at. And then the second day today was interesting. And I'm short Zane over the weekend here on the 5th of March, 2010. But the problem with talking about stocks that are just huge runners like these is it's a post hoc classification. It's like saying, let's say you're talking to young women considering marrying certain men and saying, okay, well, you got to watch out for those guys that get the 7-year itch and then go have affairs with their secretaries. And how do you know that they're going to do that? You don't until you get to the 7th year and they itch and then they go have an affair and destroy their marriage. So there's all sorts of stocks every day that go up 10%. Now those aren't very interesting, but 20, 30, 40%, that's fairly normal. And there's no way to predict which stock is going to make the biggest move. Yeah, it's a combination of low float stocks tend to make bigger moves. Stocks with low market caps, I mean, it's highly correlated with low floatness. They'll tend to make bigger moves. The better the news, the bigger the move. But still, I mean, like the news that Zane had wasn't that great. I mean, it was a contract win, but once you apply their horrible profit margin to the extra revenues they'll get from this contract, it's not that great of news. And yet still, it went up 600%. So you really can't predict beforehand. So yeah, you can look afterwards and say, oh my gosh, that was Zane, that was awesome, why didn't I get in? When it closed at 2, I saw it at 80 cents. Well, at 80 cents, it was already up 100%, and 99% of stocks, they'll stop at 100% in reverse. So you can't use your hindsight and say, oh my gosh, how did I miss that huge, huge move? Probably some of the best long side traders that I know, that certainly aren't me, that bought Zane. I know some people that bought it really early on, maybe around 50 cents or 45 cents or so, and sold it just over $1, right around here. And yeah, they missed out on a whole $1 of upside. This is just insane. But the thing is, you need to go with what's predictable and what's likely, not with what actually happens, because you can't know ahead of time what actually happens. If you can, then why the heck are you playing penny stocks? Go and play Amazon. Actually, no, just go and play the cubes, the NASDAQ ETF or the spiders, the S&P ETF, and lever up 100 times, and you'll make a couple $1 billion a day. But no, we can't trade with hindsight. So you got to look at what happens. Look at breakouts. Look at moves up off of consolidation. So the initial move was good. Then this move here, probably around 74 cents. This move here, less ideal, but still decent. And this move here. But the more it goes up in one day, the less likely it is to keep going. I almost never play these. When I do play breakouts, I play things that are more sedate, but that they have a good long-term chart. So Belm. Let's see if I can get the chart here. Was something I played yesterday, and it was just a nice little breakout. It didn't move a big percentage, but $150 is $150. And you play enough of those nice little breakouts or stocks that have a high day range that move up off of consolidation, you'll make some money. But you shouldn't get obsessed with stocks that have the huge, huge moves. Now, for playing them on the short side, yeah, wait until it has its 600% move, and then you've got good odds of shorting it once it shows some weakness, like here. So I hope that helps.